General Motors is reaffirming its full-year guidance despite missing on first-quarter revenue estimates. The carmaker beat earnings expectations, but supply chain disruptions continue to be a big overhang for the firm. For more on the road ahead for GM, let's bring in Bank of America Head of U.S. Autos Research, John Murphy. John, we were listening to the call yesterday. Mary Barra pointing out that commodity and logistic costs are now projected to increase $2.5 billion from initial estimates. I mean, that's the big question here for so many companies. When you look at GM specifically, how do you think they're positioned to ride out these continued headwinds?
Well, it's a great question. I think the $2.5 billion incremental is on top of the $2.5 billion they were expecting when they first gave guidance earlier in the year. So it's definitely, the headwinds are getting tougher. But it's very interesting loop for a lot of companies, particularly auto companies right now, because they're having a hard time getting stuff, being chips and some of the other raw mats put into their vehicles. So the prices of those are going up, which means that then they can't produce the vehicles. So then there's not enough vehicles on dealer lots. Right now, we're at about 1.2 million units on dealer lots. Traditionally, we're a little over 3 million. That's for the industry at large, not GM specifically, for the industry at large. So there's not enough vehicles because the manufacturers can't get the stuff to put in the vehicle, to make the vehicles, and then there's not enough vehicles. So you're seeing pricing of vehicles much stronger than anybody was expecting, even at the beginning of the year. And really, that is the very significant offset for GM and most manufacturers right now, is they're able to pass through this pricing and then some to the consumer because there's just not enough vehicles. And we've been at recessionary level volumes for 2020, 2021, and 2022, probably this year in the U.S., meaning there's a tremendous amount of pent-up demand. Even if pricing stays strong here, we do think volume's got a real good chance of going significantly higher from where we sit right now.
Well, the results we got yesterday certainly doesn't include the impact from the latest COVID shutdowns that we've seen over in China. GM certainly has exposure on that front. How significant do you think the hit's going to be?
Well, we'll have to see how long the shutdowns are. I mean, they're making a large majority of the money here in the U.S. and in their finance operations. So there's certainly some concern around this. And we'll have to be somewhat tempered and understand what's going on there. But once again, if we have incremental shutdowns that disrupt the supply chain in China, that's going to create a tighter inventory environment here in North America and around the world, which means the pricing may be that much higher, and then we'll have the offset yet again. So it's kind of, we've got to think about this as sort of a circular reference to some degree. Certainly concerned about what's going on in China, but I do think that you'll see pricing strength if for some reason supply is disrupted even more.
This is certainly a company that's in transition, like so many car makers right now, betting its future on EVs. That goal that GM has right now, 400,000 EVs in North America over the next 2 years. How realistic is that number when you consider all those things that you just mentioned, the supply issues, the potential issues of getting all the critical minerals? I mean, when you factor all that in, does that number still hold?
Well, I think it's a number that's probably achievable. If for some reason it's, let's say, 300 to 350,000 units, that would be a result of supply chain constraints, which would be out of GM's control. I think the bigger question is, as you look at their commitment to zero emissions in the future, once you get beyond 24 and get into calendar year 25 and 26, you really see GM's EV product portfolio explode, right? And it explodes away from the high-end, high-priced vehicles into things like the Chevy Equinox EV that'll be a $30,000 starting price point. So it explodes into the mass market, and that's where the sort of the measurement of volume and success on GM's EV efforts really should be measured. If for some reason they can't get to 400,000 units here in 22 and 23, I don't think the company should be maligned. That'll be a function of the supply chain, given their best efforts. And the reality is, if that happens, they'll probably make even more money and be able to invest more in the future. So I think there's a hyper focus on that single data point, and it's probably somewhat incorrect to focus just on that.
John, certainly a lot of competition in the EV space. It's been interesting to watch the competition build with pickup trucks. We had Ford on yesterday talking about the start of production for the F-150 Lightning. For Silverado and GM, they're not expected to go into production until next year. How significant, you think, is that first mover advantage? And how do you think GM makes up some of that slack if they are a little behind in production?
Well, I mean, they're definitively going to be behind Ford because Ford is launching the F-150, as we speak, and just started production yesterday. So they're going to be a year behind Ford. I don't think that 1 year gap will create a significant long-term advantage on Ford as a first mover before GM. I think GM will remain very competitive in the market. I think there's room for both of them. The really intriguing thing about what's going on with the F-150 Lightning and will probably happen with the Silverado and Sierra is the large majority of the buyers of these EV pickup trucks are new buyers, right? They're not your traditional pickup truck buyers, and they're not the brand specific or nameplate specific buyers that you might expect to come into the market. So in reality, what you're seeing is a huge opportunity for both Ford and I think GM to potentially increase their big money makers and the volumes by somewhere 10 to 15% at the jump, right? In the initial data we're seeing on with these EV launches, which in reality means that there's very significant upside to the company's core earnings power over time just on these trucks alone. So I think Ford's got a little bit of an advantage right now. I think they've got a very competitive product. GM will have a very competitive product, but I think for both of these companies on the pickup truck side, there's probably significant material upside by these trucks that will be driven by these trucks alone for the companies.
John, the other headline coming out of the call yesterday, compensation for executives now tied to targets that include volumes of EVs in North America. I mean, is this just sort of a way for the company to message to shareholders, yes, this is a serious commitment we're putting together? What's your read on this?
Yeah, I think it's an additional sort of tick mark in the long list of very serious things that the GM is doing. I would imagine you might see something follow, at Ford. I mean, Ford's actually split the internal reporting and external reporting between Model E and Blue. So they're doing similar sort of litmus tests that we can all kind of follow. I think this is a very important statement, though, by the board that the management is going to be held to account for these very specific EV forecasts. We don't have the full line yet, and I haven't seen them on all the metrics they're going to be measured on. But I think it's very important. But I also think even before that, GM is very serious about this. They're not screwing around. I mean, this is real stuff. The product pipeline, like I said, when you get beyond model year 25 and even in 25, it starts to really explode. So, I think it's just another proof point for investors and ESG investors specifically that the company is taking this seriously. But I think make no mistake about it, 2 days ago, GM was very serious about EVs. This might just be another litmus test that investors can use to measure it.
Okay. John Murphy, good to have you on today. Bank of America Head of U.S. Autos Research.